Welcome to another episode of the Bank Free Blueprint podcast. And today I have a good friend and expert, finance expert, George Antone. Welcome, George.
Hey, Tom, how are you?
So, George, you are the founder of Finance Academy. You have education on lower risk financial strategies. You're the best-selling author of 2 books. Just put out another book. Highly sought after guest speaker. And you are the founder of the world's largest network of private money lenders. But I want to stop there for just 1 second. I want to take just a minute to tell you that I want to share publicly the gratitude that I have for having been able to be a student of yours back in 2010. I think it was March when I met you for the first time in San Jose, California. And I don't know if you recall at that point, but I'd gone through some challenging times with the real estate market crashing and all. And so one of the first things that I noticed was and people who know you, I know will attest to this, but your authenticity, your ability to really be there present and really get people to understand, take something that's complex and make it really simple. And so what I wanted to do is just really take a second to really thank you. I really appreciate all the things that you've done for me. There's no way I'd be where I'm at right now if I hadn't
Tom,
had.
Thank you so much. It means the world to me. And honestly, I'm blown away by everything you've done. And you two have impacted so many lives. And it gives me great joy. I mean, now when we help other people change their lives, money becomes insignificant at some point, and you realize the joy you get from changing people's lives. And money buys us, time to enjoy life, but you end up realizing that we really want to just help each other. And so it is, I'll tell you, I'm so proud of what you've done and so many people that you've touched and helped. So likewise.
Thank you. And I think that's something that we really share is the desire to help others and really make it so others don't have to go through some of the challenges that we've gone through, or at least that I've gone through. And it really feels good to be able to do that. And what I've found over time is that the more that we help out others, the easier things come back. I call it the cycle of abundance. The more we give, the more we get back, the better we do. So we can give back more, we can do better. And so that's that really is something that I learned from you. So thank you very much for that.
Thank you, Tom.
And so you have, I'll just pull these up, the Wealthy Code. Right?
Yeah.
You have the Banker's Code. So in the Banker's Code, the most powerful wealth building strategies finally revealed. That one was really valuable for me. The other one, the Wealthy Code, what the wealthy know about money that most people will never know. And so those 2 books have been bestsellers, doing great. But you also have another book that you just released called Wealth Equation.
It's actually called Debt Millionaire, and I talk about the wealth equation inside of that.
Oh, gotcha.
Yeah, I have a copy of the book here. We just got the print, so we're pretty excited about it. It's
nice.
It's called Debt Millionaire.
Nice. Good. Oh, yeah, I see in my notes. Yeah, the Debt Millionaire. So, so maybe we'll catch up on that in just a bit. But I wanted to just check in with you, and if you can share just a little bit about what Finance Academy does and what are the goals of Finance Academy? Who is it that can benefit from it? What is the structure of it?
Great question. So, one of the things that the reason this was launched was I found that a lot of people out there that are going to events really don't want to be investors. They really just want they want to build wealth.
Mm-hmm.
And there was a lady one time that walked up to me after I did my keynote speech in Palm Springs, and she asked me a very funny, what I thought was a funny question. And she asked me, she said, George, is there a way to build wealth without investing without selling, without trading, without all that stuff. And so I started laughing. I said, just make more income. She goes, without changing my income and without getting married to a rich person. And I started laughing, and I said, you covered everything. And I started laughing, thinking she was joking, but she wasn't. And apparently what I found out is that there are a lot of people out there that really want to build wealth, but they don't like to take on a lot of risk. And they don't want to take the time to learn investing, because as you know, investing really is a lifetime commitment, and it takes you years to master. You can't just overnight become an investor, even though you start overnight, but you really have to. So with finance, what I decided to do, previously I was just focused in the prior years, is just focusing on investors. And what I decided to do with Finance Academy is, you know what, there's a whole segment of professionals out there that really want to build wealth without investing per se. And so Finance Academy was launched just for that. It's really based on a new paradigm, which we can talk about later, on building wealth that's completely different than what's out there. And that lady's question to me really changed everything, because it made me discover a new paradigm of building wealth. We can talk more about it, but that's who this is for. Now, investors can highly benefit from it too, because it can significantly increase their yields if they use some of the strategies in addition to what they're doing right now. So again, it's a great new paradigm of building wealth.
Okay. Yeah, let's get into that in just a bit. Just to get a little bit of your background and how you got to this point, because one of the things that you, like I mentioned earlier, you're really good at is taking complex financial strategies, or, call it whatever, strategies or techniques, and really simplifying them to something that can be done. And I know a lot of these are things that if they're done on a regular basis over not even that long a period of time, the value really shows. I mean, it's just amazing. Like, for instance, the insurance strategy, or the setting up the sort of what you call the secret bank account structure for tax benefits and things like that. Just those are some things. But you were in the software business originally, Quicken Financial Planner with Intuit Corp. Can you just describe what got you from that into the financial world, education and financial education, basically?
So what happened was, when I started working with my dad when I was 15 years old, and he owned a lot of businesses. And so I started working with him. And when I was 18, he passed away unexpectedly. So suddenly we were managing all these businesses, myself, my younger brothers. I was 18, they were 17 and 15, and my mother. And so what happened is it got me into the business world fast, overnight. And I started really enjoying it. And then fast forward, I went into software later on after college, started working at Intuit, Microsoft, a number of other companies. And as I was developing and working on Intuit's Quicken, which was a number one personal software out there in the world, and Quicken Financial Planner, one of the things I started getting intrigued by are the numbers. And one of the things I discovered while working on these products is there's an underlying formula that ties everything together, all investments. And most people are unaware of that. But what I realized with that formula, which we call the break-even formula, but anyway, so is that most people think they're moving forward financially, but they're actually moving backwards. And so I started researching that for myself and my family, and I started changing it, and I started seeing the results really quickly. And it changed the way I invest. And in 2001, I got to a point where I was like done with software. I was at the height of my career, but I really was in love with investing. So I got into investing in 2001 full time, and started dealing with buying apartment buildings, single family homes, doing private money lending, running a small fund, a number of things like that. And I really discovered that, I love helping people. So around 2006 or 2007, I started helping a few people here and there, small, 2, 3 people at a time. And that just, more people started calling me for help. And we started seeing results. And that just blossomed into a lot of people calling me and asking me to speak at different stages and stuff like that. And,
Yeah.
that's how things. And I started realizing that's my joy, is giving back. And I use a lot of numbers. I'm a very skeptical person, so a lot of people out there use a lot of claims, and I have to prove it with numbers first
Yeah.
before before I just jump into something.
Certainly, certainly. And you through that process, I remember you telling us about some of the mentoring that you had through the process and
Yeah.
the value of mentoring. And I would just say again, for me, the value of mentoring has been extremely helpful.
Yeah.
One thing that you have been doing is traveling around the country quite a bit with all these requests for speaking engagements and all of that. So I can imagine that gets you spend a lot of time on the road. But how's that been for you?
Well, it's funny you're saying that. So my goal, in fact, I have my goals written over there, but my goal is to say no more times than yes. So I've actually had to say no quite a bit, and I committed to only traveling 7 times this year, and that's it. Last year was quite a bit. I mean, it was, a lot.
Yeah.
And so, but I was excited about, sharing my message with everyone, and
Mm-hmm.
I was invited international and all that stuff. But then this year, I'm like, I'm done with that. So, so my limit is 7, and I've said yes 6 times so far for this year, 2018, and I'm going to leave the last one for something extremely special. But yeah, I've said no now more times. I'm trying to do more here in San Jose at home, and live more and focus more on lifestyle.
Yeah, I can imagine your wife and kids who I've met quite a few times. I can imagine they're pretty happy about the fact that you're going to cut down on your traveling schedule.
Yep.
Yeah. So with the training that you put together, what first of all, our listeners are generally speaking either active investors or passive investors. Active meaning they have real estate deals that they're looking to get funded, maybe short-term fix and flip or new construction.
Mm-hmm.
And then the passive investors are the ones that have money that would like to invest. And so this show is about bringing people together, strategies together, tools together, so that people can work with each other. So they don't need necessarily someone like us or my company that runs a fund or things like that. It's really about allowing people to work together and collaborate. With the training that you have put together there, how would you say that ties in with the audience that I just described?
Well, so we have so we're big believers in terms of investing. So at the investing level, we're buy and hold. Mm-hmm. And it's not specific to real estate, but real estate is a big component. In terms of, we have another level called wealth building, which is a finance academy you talked about. A lot of these, what we call building blocks, can be used anywhere.
And that's kind of where I was aiming at, was the fact that it is so broad that it can be.
Correct.
Yeah.
Correct. And there's a lot of tools in there for people like that. Again, I think what your message there is really powerful. Being able to everyone work together. One of the things I talk about a lot is being careful not to take on too much risk. So one of the things we talk about is you have to be very specific that you share the risk, so that the money person and the deal person are both sharing risk, because it's so easy, as you know, to shift the risk one way or the other. Mm-hmm. And the problem is, if one person takes on too much risk and they fail, everyone ends up losing anyways. Yes. So really the key is that you have to manage risk by looking at both sides. And it's not one versus the other, it's really both sides. Mm-hmm. And we'll have to think it through and work on the numbers.
I see. Yeah, that makes a lot of sense. Your audience, then, I would guess, and I've come across this myself too, where there are a lot of people that I run into that have the desire to move, to do something, the desire to get to really take charge and take control of their investing matters and their investing strategies, portfolio, whatever. But inertia, I describe it as inertia because it's hard for somebody to get going. What do you have to say to investors who know that consciously they know that it's something that would be really good for them to do, but they get kind of locked up in feeling like they need to know more, feeling like it has to be just right, or getting people from 0 to 1, basically? Any thoughts, any advice?
So, and are you talking about from the active side or on the passive side?
I'm talking actually from even more so the passive side, and not even necessarily as it relates to real estate, but just investing in general. And I guess where I'm going with this is a little bit is with things like the insurance strategy, or where you can, over time, you can start building systems and processes where it really adds up to a substantial amount of money over the years. And so
Yeah.
that type of thing.
Yeah. So, I mean, that's a great, great question. Again, always start with these small building blocks. And my recommendation for someone, if they're just starting out and they're so scared, is, you know what, just take 10% off your paycheck and put it aside.
Mm-hmm.
And then eventually ask yourself, because here's the part that people don't realize is at some point, you're going to end up getting to the point of retirement. And what you're going to realize at that point is that you're going to look back and you're going to realize that all these years you've been moving backwards financially. So really you have no option but to jump in there, get educated, but don't get stuck there, and start with implementing small building blocks. And so the first one might be, put 10% aside and give yourself, 3 months or so where you start that system, if you will, automatically going off, and then you add another building block and another, and then you start stacking these things and you start seeing results. But there's nothing worse than being stuck in fear and thinking, tomorrow I'm going to start, because every day is going to pass, and the ultimate asset for all of us is time. And so you really need to do something, because I cannot stress that enough. We've had people get to the point where they might come to our event and they're in their late 60s or 70s, and they look back and they say, I wish I did something.
Mm-hmm.
And they walk up to me and they're like, what can I do now? And it's like, I cannot give you more time. That's one thing we cannot do. So for people listening to this, just start. There are so many small strategies that are low risk that you can start. Just take the time, learn about them, and implement them, and make sure they're small things. They're all low risk. And I just give you one that's simple right here. The other one I would give people is, ask yourself, why is a 30-year mortgage, for example, if you have a mortgage, better than a 15-year mortgage? Well, by going from 15-year to 30-year, in many ways, you're lowering the risk. I'm all about downside and covering the downside. And so you're going to end up starting to save some money. Use that money that you saved for something else, okay, to maybe put aside, build an emergency fund. And these are simple things you can do to start. But again, there are so many important things to do. And, you have to jump in and start.
When you mention going backwards, I'm assuming you're talking at least somewhat about the inflation, the actual, what's reported as inflation versus what's real inflation. Can you just expand on that a little bit, maybe?
So what I tell people is, the analogy I give them is, imagine you're in a race and you're running in this race. And as you're running, you look up and you realize that the finish line is moving away from you, and it's moving at a very fast pace. And so the next thing you think of is, first you think, shit, right? But then you think, I need to be running at a faster rate than the finish line is moving away from me. Otherwise, even though you're moving forward, you're really moving backwards right to the finish line. So the finish line, which represents the financial system, has a speed at which it's moving. And so let's just say for now that the speed is 10%. Now, people might think it's too high, but I'll explain why I got 10%. And so now all your investments have to generate a 10% or more, whatever that number is for you. Otherwise, you're going to be moving backwards. So you might be making money. You're making, let's just say, $1,000, whatever it is from your investments, but you're technically moving backwards relative to the finish line. So in other words, you get to your retirement in this race, you get to your retirement, and you realize that the finish line is way ahead, way further than it ever has been, and you still have to keep working. So the question I ask people is, would you want to know that you're moving backwards relative to the finish line now, or when you run out of energy, or when you get to retirement, or when you're dead, right? Mm-hmm. And so finish line is really that it's not just inflation, but it's inflation and taxes. When you combine those, there's an actual formula that I can send you the cheat sheet, if you will, for your listeners. But when you plug in the numbers, let's just say your tax bracket, or what's called the effective tax rate, actually, your inflation rate, and you plug these in, and it gives you the break even. And I'm going to tell you that the majority of the people in the US, their break even is between 8% and 11-12%, depending on where you are. Let's just say 10% as an average. Mm-hmm. That means your whole portfolio, not just one investment, but your whole portfolio have to move forward 10% per year just to keep up with the finish line.
Certainly.
And it's crazy. But to me, people have to know this before it's too late and before they get to retirement. Mm-hmm. That's what I mean by moving backwards without knowing it.
Yeah, that makes a lot of sense. Even inflation, I know that over the years, 3% has been sort of a rule of thumb that has been thrown out there a lot, but that just is not even close if that's the number that we're comparing it to. So.
Yep, exactly.
So if you talk a little bit about putting together the process of putting together a capital structure a little earlier before we got on this interview, can you just share a little bit about that, what that looks like?
Yeah, so whenever someone is putting a deal, and this is really for people doing buy and hold, there are three sides that people don't realize that you have to really look at. And I typically use a triangle. And I tell people there's the money that you need to buy the asset. So it could be your money, it could be a mortgage, it could be money you raise from investors. Then you need the asset that you're going to invest in. So these are typically two sides. But the third side, that's the most important side, is what's called the capital structure. Now, most people don't think about that, but that's the part that makes people lose their shirts or jump forward financially, strictly based on the capital structure. And it's nothing more than the combination of debt and equity. So for example, if someone loses their property, they're not losing it because of the property itself. They're losing it because they have too much debt, not enough reserves, whatever it might be. So it's really the capital structure that makes people lose. So here's a process I tell people. The capital structure, you have to ask yourself, what type of asset are you buying? Now, the asset, no matter what the asset is, can be placed into one of 6 buckets. Okay, so let me walk you through the buckets. And based on that, you have to structure the capital. So you have the asset can be income only, right? Like private lending, it's income only most of the times. Growth only, something that appreciates but doesn't have income. Or both, like real estate, right? With real estate, you have appreciation and income. So these are the first 3 buckets, and under that, I'm going to put stable assets. The same thing, income, both, or growth, for volatile asset. So the first thing you do is you tell yourself, which of those 6 buckets does my asset fit in? So real estate would fit in stable and both, income and appreciation. If you're lending money and you're not asking for part of the upside, but you're strictly asking for interest, that would be, depending if it's first position, that would be stable and income only.
Mm-hmm.
If you buy land for long term, that's stable and growth only, right?
Yeah.
So what happens is, based on that, you then decide how you want to structure the capital. So, for example, if you have a growth only asset, you don't want to have regular debt, because now you have to make payments on something that doesn't pay you anything, right?
Yeah, like raw land. It's just
Exactly.
there's no income coming for it.
Exactly. So you have to then structure it either equity and or accruing debt, right? So you have to know these things. So let's just say, for example, they're buying real estate. So then they have to ask themselves, there are three dials or three variables for every single deal you do. One is percentage of debt. So let's just say LTV for now. The spread between
LTV, loan to value, right?
loan to value, the spread between the money coming in and the money going out towards debt, again, without going technical, but loan constant and cap rate,
Mm-hmm.
and finally reserves. Now, these are the three most important dials in any deal. So one of the things you have to decide is the economy going down, for example, or is it going up? So one of the things you have to ask yourself too is, can this asset carry this much debt? So one of the things that people need to understand is every single asset can only carry so much debt. So if I buy, let's say, a rental property, it can only carry, maybe, depending on that specific property, maybe 72% LTV or 83% or whatever it is. So a lot of people are putting too much debt, therefore they're taking on way too much risk. So they have to figure out how much debt, the LTV, and the other thing they have to look at is the market. If the economy is tanking, you want to have less debt and more reserves.
Mm-hmm.
If it's going up, you can have up to the maximum debt that this, so you have to look at these things. But then you also have to look at the risk metrics. There's a number of things, but that determines how much debt you have on the asset. And then you have to have reserves. That's the other part that most people don't recognize, is that you have to have reserves for every single deal that you do. And the reason is, anytime you use debt, you have to reserves go with it. So a lot of investors say, you know what? I don't need reserves. Money sitting there doing nothing. That's complete baloney.
Mm-hmm.
And they have to have reserves. So that's what really goes into the whole process.
Okay.
Yeah.
And that process, is that part of what you go through in The Debt Millionaire?
Yeah. So it's all in this book, The Debt Millionaire.
Mm-hmm.
And it shows you how to use the whole system, like we talked about earlier, to make sure you're moving forward financially. It gives you the formula and all that stuff. But I'll send you a cheat sheet for that too.
Okay, great. Could you just maybe give a quick summary of what specifically, or what generally, I guess, is in the new book?
Yeah. So in the new book, one of the things I found out from a lot of investors is that their approach to investing is incorrect. And so what I did was I showed them a completely new method that's built from the ground up based on the way the financial system works. So in other words, if I told you debt is bad, right? Well, debt is bad if there is no inflation, if there is no taxes or whatever. So if we live in a society where there's no inflation, you don't need debt, right? And debt can be bad.
Mm-hmm.
But in our situation, there is inflation, there are taxes, so all of this stuff impacts the way you invest. And so what I talk about is I show people a completely new method that actually people will actually start understanding what Robert Kiyosaki was talking about. Because a lot of things he says is completely accurate, but people don't get it,
Mm-hmm.
and they read it at face value. So this actually shows you from the ground up why it's the way it is, and how to start making the financial system work for you. In other words, right now, most investors are on the financial system is pushing them backwards.
Yeah. Which, yeah, when you look at just the name of the book, the initial thought of The Debt Millionaire, it's like, those are two opposite things, right?
Yeah,
but
exactly.
Like you said, using debt in a way that really can, it really can grow a portfolio as well if you use debt correctly, which is what Kiyosaki talks about in his book as well. So
That's correct. That's correct.
And so do you go through like strategies, techniques, processes? What do you do? What are some of the things in the book that a reader would walk away with a better understanding of?
So there's something I call a wealth equation in the book. And so let me walk you through what that is. So imagine two columns and you have two sides, paying side and the receiving side. And in terms of rows, let's just say we have, on the first one is inflation. The second one is interest. The third one is taxes. The fourth one is opportunity cost. Now, most investors, in fact, most people are on the paying side of the wealth equation table. In other words, as inflation goes up, it impacts them negatively. They're on the paying side of interest. They're on the paying side of opportunity cost. Opportunity cost actually ends up being the biggest of all these forces. And so people that are very affluent and very sophisticated investors on the right side. So in other words, as inflation goes up, it impacts them positively. So they're very thankful that inflation is starting to go up, and they're on the right side of receiving side of interest. They're on the receiving side of opportunity cost. So, and there's quite a bit more. But what happens is in the book, I show people how to move from the left, paying side, to the right, the receiving side. If you strictly focus on that, it actually doesn't matter, almost doesn't matter what the asset is as much. What matters is the underlying infrastructure, the way you structure the deal, what's called the capital structure we talked about earlier, that moves you to the right side. And so this changes and impacts every investor, whether you're doing real estate or non-real estate, and you start seeing certain things you have to do to start moving forward. And we give you some math and some things to look at and calculate to see where you are. But that's the premise of the book.
I see.
Yeah.
Sounds very interesting. Do you, the cheat sheet that you mentioned, is that sort of an analyzer or calculator?
Yeah, what it does is that is a simple worksheet that I have people do and fill out that shows them how fast the financial system is moving away from them and what speed, if you will, they should be moving towards their finish line. So going back to the finish line. So for them, because it's based on their taxes and things like this, they simply fill out 2 or 3 numbers and they get from their accountant, and they figure out what is that yield that they have to generate every single year to leap forward financially. Mm-hmm. And so it's very helpful as a starting point so people know where they are and what they need to do to adjust to beat that system, that number.
Yeah, I see. Great. Well, that's great that you're offering that. If people want to reach out and get a hold of you, they can go to finance.com, and that's FYNANC. So FYNANC.com. And we're going to put a link in for anybody who wants to get the cheat sheet. But in the meantime, if you have questions for George or his team, I'm sure, well, I should ask George, is that all right if they contact you at the website? And,
yeah, that would be great. And if they want a copy of the book, it's on Amazon too. So whatever they decide, we're totally, we're here for everyone.
Yeah, very cool. So a couple of other questions. Swanee, this one is an important question. Have you guys been out singing karaoke lately?
So just so everyone knows, we went
an inside joke here, but George and Swanee and Patrick Chi and a couple other people, we had the opportunity to go out one day and stretch our limits a bit and go out and sing karaoke. And I think of that every once in a while. So,
you know what? Here's what happened. I just want to spill the beans here. So I went there with the intention of not singing. Mm-hmm. And I know Patrick did the same thing too. We were like, there's no way on earth we're going to sing. Mm-hmm. So fast forward an hour in the bar, and we're all in front singing. And it was an incredible night. And
it was. And it really, it kind of shows the power of just setting aside fears and just, going out and doing it. And, I can I can pretty much guarantee you that nobody that was there that night remembers us right now. So even as bad as I may have been, they still don't remember.
Well, I was terrible, but you
And
were excellent. So,
but anyway,
that's true.
that was really cool. And I see that you have her on as your master juggler and drama eliminator. I thought that was pretty clever. So she's the one that helps hold everything together. You
Yeah.
guys have quite a team there. Willie Hooks is on
Mhm.
as part of the team. It's just Kara, just a lot of people that I remember from way back. And
Yeah.
so you've got a really cool power team there. So
Tom, it's lifestyle is so important for us. We built this whole company to really support our lifestyle. And one of the big lessons I learned that I would like to share with everyone is for business owners out there, whether you do real estate or non-real estate, think about the business there to support you. I think what happened with us is at one point or at some point, it switched. We became a slave to our own success. And so we were making all this money with different investments and all that. But what I realized for me is that I had to give up my lifestyle. And so I became a slave to my own success. But now we switched it back where we lowered our revenues on purpose
mhm.
so that we can have the lifestyle we have. And we now think of the business and our investments as a way to support our lifestyle. So this way, we are, I'm working out, I'm spending more time doing, fun things, and same thing with the whole team. And I tell the whole team, this is not some business we're gonna sell or whatever. This is just for us to enjoy
Mhm.
our lives
And
and
be able to
support
share.
our lifestyle. So really, you'll see all of us are doing more of that. Kara's working out now, and the whole team is doing some fun stuff.
Yeah, be sure you if you think of it, tell them all I said hi. So
Excellent. I'll do
uh,
that.
now, if just a couple of quick questions still, if you were to say one thing that you wish you had known back whenever that might be, can you what comes to mind if only I had known blank, then blank.
You know what I just shared with you right now um, is exactly it. Is um, really the ultimate thing for entrepreneurs and investors is freedom. And it's really not about, so I would tell people one thing I wish I did and I knew is that writing down my perfect day.
Mm.
So when you write down your perfect day, which is essentially you wake up on a Saturday morning, and if money wasn't an issue, what would you do from morning all the way to night, right? Like be very detailed. Who are you with? Where do you eat? All that stuff. And what you realize by doing that is that's the world you want.
Mm-hmm.
And because media makes us think we want something different. It's the car, it's this, it's not. It's really freedom ultimately. And so what happens is I wish people, I realized that, but what I tell people is we're being brainwashed to think success is the amount of money we have or the car we drive or the mansion we have or whatever it is. And that is totally not true. When you write the perfect day, you realize life can be much simpler as long as you're happy. You have the experiences you want, you have the friends, the family, the people you want around you, the impact you want to have on the world. That brings you joy much more than the car. And I've driven the nicest cars, and I'll tell you, it doesn't get me, maybe it gets me joy for the first 2 days, okay,
Mm.
maybe 3 days, but that's it. And what's more lasting is the impact. So I wish I focused on the perfect day early on. And so for everyone, use the businesses or the investments or whatever it is you do to support the lifestyle that you want or the perfect day that you want. So that's one thing I would say for myself and everyone else.
Got it. Got it. Thank you. Great advice. Great advice. If there was, uh, let me ask this: is there anything that you are aiming for that you have not achieved yet? Uh, and I guess where I'm going with this is we tend to have things that stop us in our life and or slow us down. Where do you see yourself going? What sort of roadblocks do you see, if any? And what do you see in your future?
Great question. It's funny. I'm looking over there at my. I wrote 3 goals for myself this year, and so knock on wood, I'm living the life I've always wanted. The biggest thing I'm focused on this year is my health, and just getting healthier. That to me is the number one. The number 2 is very close to that. Again, this personal goals, being more active by doing more things. My goal at the end of 2018 is to go one of those mud races. So wow. You'll be seeing me. But it's just more revolved around lifestyle again. So getting healthier, doing more stuff that's active lifestyle. Mm-hmm. And I have a very specific goal to impact 40 specific people this year and show them something that is life-changing by having them impact people in their community. So I've been focused on that, and I'm already starting to see results. But 2018, I want to take it to the next level, and I want to make sure we spread the impact all over the U.S. first. And so I have these 40 people that I'm working with very, very closely to get them to do that. And so to me, that is the biggest joy. But in terms of impact, the other thing I did, I signed up for Anthony Robbins. I'm going to his big event here in San Jose in March.
Oh,
so I'm pretty
yeah.
excited about it.
Yeah, nice. One of his representatives spoke at my Real Estate Investor Club meeting a couple of weeks ago. And,
excellent.
And so, yeah, we have a lot of people that signed up for that, and I plan on going to it too. So that definitely.
Oh, excellent! I'll see you there then.
Look forward to seeing you there. And also, I would, I'm really, I'll ask you again when, or maybe Swanee might be able to help schedule it, but would love to have you speak at our Bay Area Private Money Meetup again. We have, I don't know if I told you, but we have about over 3,100 members right now for that real estate group, and we get about 90 to 100 people at the event. And
amazing.
Yeah. So at some point I'm going to twist your arm just a little bit harder again. And
yeah, that sounds good.
One last question, and I'll let you back out of answering this one if you so choose. But what is one thing that most people don't know about you? I am a
pretty shy guy. Mm-hmm. And people think I'm speaking on a big stages or whatever, but I'm a introvert, and I don't like to get out there too much in terms of but otherwise, yeah, I'm pretty down to
Well, yeah, because I know you fairly well. I can certainly see some of that, and I share a lot of that sort of a way of being. But it's also, for me, what really gets me out there is the value that I see in being able to share what I've learned with others. Hopefully other people can get value from it. And I think that's where you're coming from too. So that's what, at least for me, that's what drives me to be out there and in front of people. So.
Yep. Thanks.
But, so for anybody who would like to get the cheat sheet, the mini analyzer, just we'll put the link for the cheat sheet in the show notes. And we are on iTunes, we're on Stitcher, SoundCloud. So sign up for the Bang Free Blueprint podcast. You can subscribe there. Also, for the Debt Millionaire book, just go to Amazon, and you'll be able to pick up the latest book, the latest of 3. Again, the others were the Wealthy Code and the Banker's Code, and now we have the Debt Millionaire. So, George, I want to take. I really want to thank you for taking the time and the valuable information. I know you've affected a lot of people's lives. I know that you're you're continuing to do that, and really appreciate you taking the time here.